Good morning, all. My name is Katelijne Martin. I work for Bouwinvest, and Bouwinvest has in the Netherlands direct investments for third-party investors, and also our anchor investor, the pension fund for construction workers. I'm responsible for our indirect investments within Europe, so outside of the Netherlands, and we invest on behalf of the pension fund of construction workers indirectly in the US, Europe, and Asia Pacific.
Great, thank you. Jorik.
Well, good afternoon. My name is Jorik Beijer, and I'm the foundation manager for the Class of 2020. The Class of 2020 is Europe's leading think tank on student living. We do research, organize events. We focus, for example, on the attraction of talent to international cities.
Great, Howard.
Good afternoon. My name is Howard Friedman. I head up the National Real Estate and Construction team at RSM in the UK, and I'm based in London. RSM are an international accounting, tax and consulting firm, and I'm also part of our European real estate team, which currently comprises of our French, German, Dutch and Lux firms as well.
Great, thank you. Wolfgang.
Hello, my name is Wolfgang Speer. I'm part of Colliers International, one of the leading service providers in real estate. We are doing all kinds of transactions, investment in capital markets, but also tenant representation, landlord representation, and so on. We are 15,000 employees globally in more than 68 countries. And in my role, Occupier Services, I spent half of my lifetime, my business lifetime, within the corporate environment, the Siemens AG, and now the second half within Colliers. And happy to be part of this panel.
Great, Marty.
Hello, good afternoon, everyone. I'm Marty Mocrane. I head the European Research and Strategy team at LaSalle Investment Management. So LaSalle Investment Management has about $60 billion of assets under management across the different, what we call 4 regions, which is essentially North America, Europe, Asia, as well as what we call securities. That's a very big part of what we manage. And my role is really to design strategies for our different pools of clients, from pension funds to our dedicated separate accounts, and as well as funds across the European markets.
Marty, just starting with you, I mean, we've been looking at this macro theme of urbanization, and that's become a major theme across the globe, but also especially in Europe, with cities growing consistently. What's driving that, and will that trend continue, do you think?
I think there's been a lot of interest around, moving out of a macro view of Europe into more regional and sub-regional. I think what's changed now is, of course, the appetite for real estate has grown across, over the last, 10 years after the GFC. We didn't have a lot of data or micro data to actually back that up, let's say 10, 15 years ago. But there was this theme of really, can we drill down at a regional level? What we had done at LaSalle about 18 years ago is create an index called the EREGI index, which is the European Regional Growth Index. That works at a regional, those subdivisions of Europe that we call NUTS. NUTS 1, NUTS 2, NUTS 3. You go down into the micro level, and we've injected those themes across the time, and we found some really interesting patterns. So I think investors have always been interested in micro. It's just that today they're probably more keenly interested in trying to find new emerging areas in established markets or new cities or new markets outside those really big established markets. And you need tools to back that up.
Okay, good. And Kathleen, I mean, you're investing as well, obviously. Are you really focused on, have you changed your focus onto cities maybe rather than countries? How do you look at that? Has this increased focus on urbanization also changed your investment strategy as a house?
Yeah, it really has changed with us the past years. In the past, we invested in a sector and a market, but the market was then a country investment. And these days, we take a look at the cities, the major metropolitan cities of each country. So it's more important the cities as itself than the countries. Yep.
Okay, and Wolfgang, just coming to you, because obviously you're focused here on Germany. In terms of this urbanization trend, how are you seeing that in Germany? And is it leading you, I mean, along with, obviously Damien has pointed out these changes in infrastructure, does that lead you to any conclusions about specific cities that might grow or outperform?
Well, the urbanization is not only a German-specific issue. I think it's globally, or at least in Europe, and we see a lot of cities who have an increased demand in offices, but also in residential. And we are all commercial real estate professionals, but decisions on the commercial real estate side, from the tenant or from the investor side, is also driven now where do the people can live, and the pressure on residential availabilities is higher than ever. So therefore, yes, infrastructure in urbanization, metropolitan areas is key, and this is something where the cities and governments has to do a lot.
And Howard, I just wanted to pick up, because I was at your building this week, last week in fact. Just let me know a little bit about, I mean, we heard from Damien there a little bit about Brexit and the influence that it's having. Can you just pick that up a little bit in terms of what you're seeing in terms of the investors that you're acting for, and your sense also of the development that's active at the moment in London?
Well, as far as London is concerned, it's always proved to be very resilient over, well, for as long as I can remember, and I think the stats that went up earlier on seem to support that. There's still a great deal of development going on in London, and pricing still seems to be very strong with both occupier demand and from investors too. I think what we are seeing is, because of the changing workplace, that the buildings need to be, the newer buildings need to be smarter and better, and really fit for 21st century working. And clearly there are pressures, as we've heard, on urbanisation, and certainly over the years London has always seemed to be the centre of attention in the UK, but now what we're seeing is some of the other cities, so Manchester, Birmingham and Bristol we've now seen, and Edinburgh, attracting interest because accommodation is more easily available and more reasonable to younger workers, effectively.
Okay, good. And that's an interesting point about the changes in terms of what's required in terms of office space, but also in cities. Yorick, now, naturally, we would normally see you on a student housing panel, and indeed you will be on the student housing panel later as part of the class of 2020. But one of the interesting things I think is that students are only students for approximately 3 or 4 years, and since you started the foundation, then a lot of those students are now increasingly in the workplace. So what I wanted to just get a sense of was, what are you seeing in terms of the changes that those generations are looking for, and how is that impacting on the workplace of the future, and what do they need from a city?
Yeah, sure, yeah. Very interesting question. I think when looking at students and internationalization of higher education, and you really see that over the last 5 years, students have become increasingly mobile. And so we were just talking about it, 95% of students will have international experience. And we also now see that students, also after their graduation, also stay mobile. So they go to London, and they go to Paris, Madrid for work, and they're really travel bugs in that sense. And I would say cities are one of the key indicators for them to pick. They go for culture, they go for a certain atmosphere, and then jobs follow. I would definitely say that's one of the things that has been changing. Work follows talent at this moment. Nevertheless, also the very concept of work has been changing. And so also offices, we now see a rapid, what we call the co-revolution, co-workspaces popping up. And so students and young professionals also have different needs in terms of how they experience work, how they work more global, more mobile, more digital. And I think if we look at cities, then livability and the affordability of housing is one of the key aspects. And for cities to compete, we just saw one of the last rankings on talent competitiveness done by INSEAD, and we see that first of all, mobility is key. Second, also the educational workforce, so a high-skilled labor, but also livability and quality of living as essential for cities. So I think that is one of the things cities should really focus on.
Okay, good. And Marty, obviously in the eRegi research that you're doing and the fund, human capital has kind of more recently come into that fund as a way of looking and assessing the investments. Just give us a little bit of information about how you see that human capital story and that attracting talent and where that fits in your investment strategy.
Let me start by just going one moment back to the eRegi, that index. We use it actually to guide investment strategy for a fund that's now about 650 million in size across different cities across Europe. We only invest in the top tier of that eRegi index, and that's proven to be very good for our performance. Why? We've correlated back. With 18 years of history, you can actually backtest and say, well, has this been useful? Has this been conducive to superior performance? Have I invested, more extensively in those cities that actually have those strengths? The strengths are really about growth in population, growth in employment and jobs. We had an R&D, research and development expenditure feature, which I think is very important. Every one of us would agree. But it's not the best of measures. So we've replaced that 2 years ago with what we call a human capital index. And it's linked to level of education, secondary and higher education. It's linked to creativity. Are you actually using patents? Are you actually linking up universities with businesses? And we have measures of that. And then the third pillar, which I think is very important, is do you have venture capital to back that up? So we've created another index that we've injected in our eRegi index. And it's fascinating to see the patterns of cities across time. The beauty of this is that we were able to go back pre-GFC and then tested, statistically, we spent a lot of time doing that, testing, had I invested on the back of those themes, would my performance have been better on a risk-adjusted basis? And the answer was clearly yes. So I think we're just using tools now. There's way more data. We can introduce but we don't know whether we have the best tool, but we have something that's useful and we can, tailor it to the needs of a portfolio manager.
Okay, good. And Catalin, are you beginning to look more at those softer factors like wellness, like livability? I mean, we'll do a session later on technology, and we've done a couple of those sessions recently, both in Luxembourg and London, where looking at smart cities as well, and wellness, and the fact that it makes your staff therefore more efficient, so productivity goes up, and different ways of measuring that kind of sustainability of the investment. How important are those kind of, what would have been viewed as kind of soft investment topics now from your investment strategy?
Also, the soft items are really important for us. We are then the owners of a building, but the tenants, they of course, for them it's also very important. So if we're also now doing a student housing investment in Dublin, and it's key that it's in the city center, that there are the shops, there are the offices, the universities. Everything should be in the near surrounding. But that is not only important for a student housing investment, but also for offices. We don't like areas where there are only offices and in the evening it's all black and dark, and so we like a metropolitan area where there's a mixed use, and so also the soft items are then important, and the sustainability as well.
Okay, good. I wanted to pick up with you, Wolfgang, just because you've been at Siemens and you're also looking at occupier services. Does what we've heard from Marty and also here from Catalin, does that fit with what the occupiers are looking for as well as what the investors are looking for?
100%. So if occupier is looking for a new location, all these hard facts, data from research are more and more key, but also the soft facts. What are doing my competitors? How do my employees feel? This is more and more important, and we have a lot of examples where many big corporations are coming from the outskirts of the metropolitan areas in Germany, coming back to the city center. Why? Because they are more visible. They want to be more visible than in the past, and they want to be more attractive versus the others. So we have different, I would say, drivers for decisions, but definitely that hard facts are very important, but also the soft facts, so that the people are enjoying coming to the office. That is funny, because a couple of years ago there was a trend to say, well, we are so mobile, as you said, we can work from everywhere. And do we need any offices, or just do we need some hotspots somewhere to touch down and log in? But now we can see a trend definitely that the most corporates are investing in good locations, which is for the investors very important, but also for a working environment which attracts the people to come into the office and gives them an environment where they can bring in their whole experience and, bring out or get out the best output.
Okay, good. Yeah, Howard, go ahead.
I was going to say what's clear to me is certainly when you talk to developers, investors, stroke developers, when they're looking at putting a new project together, they certainly are taking the new mode of working into account, what occupiers want, what people want from their space. And we've seen changes in design, and the growth in the prop tech industry as well has also changed the way I think developers think.
Let me give you just an example. We're completely refurbishing an office building in the city in London. The question today, of course, is do we want to refurbish it in the sort of traditional style? It was formerly a trading sort of floor, a series of trading floors. We're adding space on top, 3 floors. And these discussions, these options today are key, because we need maybe to invest a little bit more to keep those flexible floor plans, maybe those pillars completely naked to give that look and feel for the kind of working environment of the shared office space. We need to accept that leases will be by nature quite different. Many of the tenants would actually are looking for something else. We need to model that and be able to be very confident that we're in exact great location, but the nature of the cash flows we're going to expect from that asset are not likely to be different from what we've had the last 20 years. So what I'm saying here is that the tools we're putting together, thanks to digital, capturing those trends, they're very important, but you never really know if it's a long-term standing trend or just a fad or something that will, fizzle out. Think about the millennials wanting to come to the cities, and then maybe now, affordability will actually push them out. Maybe Bristol, maybe Birmingham or Manchester is the next big thing, because London's sort of victim of its own success, the winner's curse, right? And then affordability, pushes talent out. So clearly, we're keeping an eye on that.
Yeah, and I think that's an interesting point. There was one company, I can't remember who they were now, but who were a kind of tech innovation company who decided to not have their headquarters in London, but decided to have it in Berlin because of exactly that affordability, that it had a similar kind of enjoyment factor, but it was much more affordable in terms of housing. How important are those kinds of things for you as well, that affordability of it for people to actually go and live within that city? Kathleen, sorry, yeah.
The affordability is key for us. It's of course due to the urbanization, there are challenges to keep housing affordable. However, when in every or even if there's a crisis or not, people have to live, and in affordable housing. So we're really in favor of those types of housing.
Okay, good. And Jurek, just coming to you, I mean, because universities, colleges have a duty of care almost for the students, that means that actually there's something within that already begins to look after wellness and their health. And trying to make the campuses more user-friendly and those things. Do you think those kinds of things are now beginning to come? Do you think that's part of this drive for wellness, or do you think it's just more data is available?
I mean, let me just on that one. We've invested about £700 million in the UK over the last 6 years in student housing. We actually started as investment managers. We started off by buying long-leased student housing halls, leased back by universities. And as competition, we thought we were a bit early. Then we moved to direct-led student housing. But we changed our strategy. We went to more urban, more central locations within big cities. And then what we've discovered is that you have to put an operator onto these assets. And the type of services that we are actually bringing, the list of services is way higher than what you can find in traditional student halls. So this is something that is the demand factor from the students. They sometimes have to pay a bit more, but they're clearly expecting to have that one-stop shop for all the services.
I agree. I think coming back to your question, I think in that sense, continental Europe is also behind of the UK, where universities really take care of housing, but also for things as residence life. I mean, we slowly now in continental Europe start to see operators actually taking care of joy, but also of mental aid, for example, for students. And so this is a more inclusive experience. And I think two of the key things regard to student housing is indeed it's the brand. I think students are more and more interested in going for an operator with a certain brand and a look and feel. And also, second thing, the quality of living provided by social events, by mental aid, by wellness, by sports, and also the proximity of other facilities around it. And I think that's you also see that now coming back to the workspace, because these students have been treated in that sense, have enjoyed that, and now they also demand that from their next employer.
I can't agree more. I mean, we have now a new job description. It's a well-being manager. So it's somebody who is caring in the office for the employees. It's not a joke. It's already implemented in a couple of companies who are just caring that the employees are happy. Happy is a little bit, well, I would say, lax description, but I think you know what I mean. And especially the Generation X, which is coming now into the market force, they are not driven by status symbols like we all have been, like your own single office, your company car, whatever you wanted to have when you started your career 20 or 30 years ago. They are absolutely focused on different things. They want to be in a very autonomous function so that they can drive their work as they would like to. And also they are much more egocentric. They are self-focused. So what is good for me is first, and what is good for the company is second. Sorry for being hard, but that is a new attitude, which is it's not a fashion, which is for one or a couple of years, but I think it's a change in attitude, and most of these guys sitting around on Expo are 20 or maybe more years in the business, and I believe that we have to, well, not to change our mind, but to accept this new attitude, and this will be some impact on the buildings, student housing, the accommodations, but also for the new offices.
Yeah, definitely. Maybe to very shortly comment on that.
I was going to say, should we just all go for a beer? Shall we just?
No, we can. But I think talking about beer, Uniplaces, which is on the stand here, is an interesting example of a company which was yesterday listed in Wired as one of the top 10 most attractive companies in Europe, one of the coolest workplaces, I think. And these are the things that these tech companies providing a certain work culture, but also a social culture. That is now being desired for by young talent, definitely, yeah.
I think you're also seeing an extension of the student type accommodation into private rental schemes now, where people are now looking for a fully serviced place to live with some shared spaces and maybe shared facilities too. So I think the whole environment now in terms of urbanisation and workspace is certainly changing.
Okay, good.
I was just going to say two very quick things. The first, going back to the student housing and your occupiers. In the past, obviously, let's say 30 years ago, you'd lease a building and then just, basically forget about it until lease events, lease break or renegotiation. Today, your tenant, be that a student or an office occupier, actually can feed back very, very quickly. And if you don't react, and if you don't manage your asset properly, it'll be on the internet. You'll have feedback by ways you would never have imagined, and students can be very harsh if you actually have done something bad in your student hall. So that's for one thing. Then technology also enables you to measure now, whether these feel-good factors are conducive to productivity. So your tenant asks you to actually help him or her manage that feedback loop, and take those suggestions into account as live during a lease, during the lease. So these flexibility measures are things that, the new job description of an asset manager for an office or retail is completely different from what it was in the past. And just one anecdote, I visited the WeWork in London, and we toured with my team. We toured the asset for about an hour, and then at the end, I told the gentleman who was the manager of the building for WeWork, you sound to me like a shopping center manager or a hotel operator, the manager of a hotel, because people were coming to him for little complaints. Can I just move my office or my desk from here to there? He was touring as you were touring a shopping center. So it's a completely different kind of job today for the office.
I mean, it's really interesting. So tomorrow we've also got a session on what the office of the future will be. And one of the things that's been interesting me about that whole topic is we also did a whole session just on the concept of the guest about 6 months ago, and how hospitality, not just as a sector, but actually as a concept, is beginning to change everybody's views of, are they really a shopper? Or are they actually a guest in your shopping centre?
The anecdote with an apart hotel that now has a dog at the reception. So when you have a repeat guest, the dog recognizes you, and you feel completely at home when you walk in.
Okay, that's good. I'm going to try and get that on the front page of the Expo Daily News with a picture of a dog. That's great. Look, we've talked about a lot of those soft factors, which are really interesting. Let's also pick up just some of the harder factors. Howard, obviously from a legal perspective, tax perspective, how important is transparency, political risk? So you've obviously we saw that Moscow is still seeing quite a lot of investments, but you've got Moscow, you've got Istanbul, previously large cities, now with big political risk. How important are those factors in either blocking investments or just creating more thought about whether somebody should go into it?
I still think they remain very important. I think certainly in times of uncertainty, people look for stability, both politically and economic stability. Certainly we've seen that in the UK, and I think that still is one of the attractions of the UK, as it is for some of the other key capital cities. And I think if people are looking at investing outside of what I call the traditional well-known cities, that certainly does change people's views slightly, particularly in uncertain times.
Okay, good. And Katalin, just from your standpoint as an investor, what can cities do to be able to convince you that they are making the right steps? Because picking up Damien's point of people investing in future cities, are you looking at what's happening with infrastructure, trying to work with cities to be able to encourage them to make themselves more investable for you to have a more sustainable investment?
Within Bouwinvest we developed a tool, the Global Market Monitor, and for that tool it's important the economic stability, but also in the past and the future, also transparency, that it's so we look also at the past, and for new future cities, that is more a challenge for us, because we invest on behalf of a pension fund. It may not be too risky. We can only do a small percentage of higher risk investments. So if we choose to make a high risk investment, it's more in the cities that are already well known, and but we are also helping cities or in discussions with cities to develop them more and more. But what I said, for a pension fund, that is sometimes a challenge.
Okay, good. Are there any questions from anybody for either the panel or for Damien? If you have, put your hand up. Yes. Maybe I can get that to you.
Talking about the soft structure and all of those things, I'm Ann Russell from the United States, from Los Angeles. We talk about lifestyle and good living all the time there and making sure our employees are very happy. And I'm wondering, you're taking this out of the university into the workplace. Have you made arrangements or thinking about arrangements as how your employees change when they get married, when they have children, whether or not they'll move out of the city, back out into the suburbs, and what kind of situations you're different employers are going to make for that change.
Thank you. Who wants to pick that up? How closely are you following the lives of your students now? That's the question.
Well, I don't have any students myself. No, but I think you're right, and I think also things like marriage or relationships are in that sense also catering again this mobility of students and young professionals. And so we also, as the Class of 2020, also attract very talented internationals just because their husband moves to Amsterdam. Well, we get to work with a very talented wife, and so that is definitely something that caters to that. But I'm not in that sense a big employer.
Yeah.
Maybe Marty, you can.
I think, as I was saying, how do you distinguish between a trend and it's just a fad? And of course, Generation X, Generation Y, this move to the cities, it's been observed. But we keep, particularly our colleagues, my colleagues in the U.S. are, have this question for our investment committees: is the ebb going to, go back? And this is a question that goes back to affordability. Question that goes back to transportation. Can you still be in a sort of satellite community that actually connects very well to where the jobs are, and particularly just continue your career without having that sort of as you move out you have to change your job and change the complete perspective. The other thing is about gender equality, because of course women are, we see that in the stats, in our HR can keep reminding us that if you want to keep your talent irrespective of gender, you have to make those moves more swiftly. And being able to work from home a day a week, or facilitating those options. But we're not a big company, but we're very conscious of those trends and those themes.
Okay, good. Any other questions? I've got a last one, which is, given the analysis, does that tell you anything about where you think one should invest, whether that's a sector, an asset type, or even a city that's likely to outperform? I'll start with you, Marty, and finish with you, Kathleen.
Okay, so luckily, when you have big data sets and when you've actually done the work of going back through your indices, whether perfect or imperfect, for a long time, you can interrogate the data and then map that to performance. What we found is that you have essentially 4 groups of cities. Just to talk about Europe, which I know best. What we call the consistent cities. Think of Paris, London, Munich, Amsterdam, Birmingham. They're really Manchester. They're really part of those cities that score highly. I have to say, irrespective of the cycle, they score highly, and they're resilient. Even if you have a capital market backlash, they come back. So they're consistent. And then we found another group of cities that are actually a subset. They're called the affluent cities. These cities in Switzerland. Antwerp, Luxembourg, they're part of those. They're smaller, very difficult to invest, quite expensive in terms of price per square meter or yield terms, but they have high human capital. They tend to have a lot of investments into research and development, and then you have what I call the more volatile, the movers. These are more or less in the southern part of Europe. Think of Madrid, Barcelona, Milan, Madrid, Dublin. Not the southern part of Europe, but clearly a mover, and they're very cyclical. So it's a different pool of capital that you have to attach to those strategies. So today, Madrid that's great, but historically it's been volatile. So you have to think about how much risk capital you attach to that. And then finally, the aspiring, that's more Central Eastern Europe, and you talked about Istanbul. These cities have tried to gradually improve their ranking over time. But there's this transparency issue. Today, I would probably, given where we're in the cycle, major on finding opportunities within the consistent.
Okay, good. Wolfgang.
From the occupier side, the big capital markets, like you said, are very attractive because I find there are good universities, good employees, a very good structure, all the surroundings which the employees want to have, and this is always attractive for the companies. This will be in the future as well, but we have to see that a couple of cities from a political influence, like Istanbul, for example, are dropping down now a little bit. But I'm with you that in the main cities there will be no big change because they are such a strong magnet to everything, to capital, to people, to knowledge, to R&D, whatever, so that these 6 or 7 big cities in Europe and also the B and C cities are stable.
Okay, good. Howard?
I think cities will always remain a strong target for investors, but I think, as I said earlier, I think the well-known capital cities or principal cities will still be favoured, particularly as we're in uncertain times. But I also think investors are going to look slightly differently at some other asset classes within real estate. And certainly we've seen the growth in the logistics sector, particularly given the growth of e-commerce, and I think that's also will continue to be very attractive.
Okay, good, Jorik.
I think we're falling a bit into repetition almost, but I think for me and also for the Class 2020, of course, the relation to universities is key. And then you obviously have strong cities like Stockholm, like Copenhagen, but also interesting cities coming up like Gothenburg, Dublin, Lisbon, Turin, Bologna. And also these kind of cities have a lot of growth potential and are still also more affordable at this point. So we'll take a look in that direction. Okay,
good. Kathleen.
Yeah, within Bouwinvest, what I earlier said, we have a tool, and that is a tool where we rank the stars. So every city for a special sector. So it's not, you can't say in general that city is great, but for certain sectors it's more attractive for us as an investor, because we also like to make returns, of course.